Hi everybody, it's me again. Well, to kick off this quarter's session in MBA540, I thought we'd go through this cash flow statement, and I thought we'd develop a cash flow statement, I mean to say. But before I do that, I'd like you to look over, I've got the balance sheet for MicroDrive for 2013 and 2012, and you can see that here's the assets side, here's the liabilities, and the preferred stock and the common stock. Then we've got an income statement here, and they've gone from $5 million in sales to $220,000 in net income. And now from those two statements, from the balance sheet, from the income statement, we want to create a cash flow statement. And before we get into it, I just want to say this is the cash flow is probably one of the most interesting statements we have in the balance sheet, or in financial statements that a company has, because the cash flow statements has three basic components: operating activities, investing activities, and financing activities. And what you see here in this case, this company's got $158,000 of cash coming from the operating activities, and the changes in the current assets and current liabilities, which those changes affect the cash flow. In this case, it's $158,000 of positive cash flow coming from the operating activities. Then we've got investing activities, and there's a big chunk here of increased acquisition of fixed assets of half a billion dollars, $500 million. Well, I guess it's $500,000. That's a lot. So you want to find out how they finance that. Well, we can look down in the financing activities, and we can see that they increased notes payable by $150,000. They increased bonds by $200,000. So that's $350,000. And then this cash flow coming in from the operating activities allowed them to invest in this acquisition of fixed assets. And then what you see here, the total of $158,000 minus $460,000 positive $292,000, that net change, when you add those all up, is at $10,000 minus cash. And the cash at the beginning of the year was $60,000, and you can see you see that over in the 2012 balance sheet, and you deduct from that $60,000 to $10,000, and you come up with the cash at the end of the year of $50,000, and you can reconcile that back to this figure over here in the balance sheet. So, having said all that, let's just go through this. But I guess the one thing I want to make sure is clear: the cash flow statement really gives us a lot of information about how this company how it finances its operations, where the money comes from, where it's invested, and how all that it strengthens the company. So now let's go through with it. So we got here. Let me just get my little deal here, and we can see that the net income from before preferred is $228,000, and to that we're going to add depreciation, which is over here in the income statement, because cash flow is depreciation is a non-cash transaction, and so we have to add that back into the beginning this net income before preferred. Then we have an increase in receivables. You can see here our receivables went from $380,000 to $500,000. That's a minus $120,000. That cash flow, that increase in those receivables, has to be financed, so it reduces cash flow by $120,000. The same is true with inventories. Inventories goes up from $820,000 to $1 million. That's $180,000. So that's also eats up cash. Then accounts payable went up by $10,000, goes from $190,000 to $200,000. That adds cash, as well as the increase in accruals. So all the total of those things is $158,000. Next, we take a look at the investing activities, and the big number here is $500,000 of an increase in fixed assets. And where does that come from? Well, you can see over here that the net plant and equipment goes from $1.7 million to $2 million. then we have to that number, excuse me, that's only $300,000. But we have to add $200,000 of the depreciation to that to get the real number, which is $500,000. Then the sale of short-term investments is the next one. You can see it here as 40, and then they sold it, so it's 0 now. So net cash used, excuse me, is $460,000. The next thing we have is financing activities. And you can see that from this that there's an increase in notes payable of $150,000. Increase in bonds of $200,000, and that comes from here and here. You can see where we get that. Then we paid dividends, and we paid dividends $8,000 for preferred and $50,000 for common dividends. So that's a negative cash. So the net cash provided is $292,000, which gets added to or subtracted by $460,000 and added to $158,000 to the operating activities, so that we get a net change in cash of $10,000. And then we've gone through the rest of that before. Let me know if you have any questions. I hope this is helpful to you. You can watch this at your home at night till you get a good handle on how to develop operating cash flow statements. And then the thing I'd like you to take a look at, how much information we get from this cash flow, which helps us understand how the financial aspects of the business runs. See you next time.